Hey everyone, welcome to another edition of Trading Bitcoin with your host Tone Vase. I was out at a little after party after the conference, which was really cool, by the way. Like, I mean, the speakers were like so many speakers were like ICO people, and I'm totally not new to that. I mean, none of that was any different, but the venue was really cool, and I really like Ukraine, and the people are really nice, and like I'm so used to these altcoin conferences that like they don't even faze me anymore. Tired of explaining the same thing. Did a lot of good interviews. Practice my Russian. And you know what? I'm gonna pass on that question, Bobby. But good question. Let me not get myself in trouble. But I'm home. I'm home. It's 11 p.m. I'm in Ukraine, and well. I don't need this anymore. And I'm back in the apartment. Anyway, I'll take care of that later. All right. I think it's just going to be me today. I texted the link to a few people. I'll keep an eye on other people. Like I mean, this was a last minute stream. I shot the link over to Tyler. I shot the link over to a couple of other people. We'll see. We'll see if anybody else joins me. I'll keep an eye. I'll try to keep an eye on it. Let me just situate the Q&A part. I think Corey is going to be helping me with Q&A. Corey, if you're there, do some Q&A for me, please. You can just shoot it over on Telegram. I'll keep my Telegram open. And yeah, we're gonna dissect. We're gonna dissect that happened. All right, let's just go straight to screen share. Let's go straight to screen share. Yep, cool. Corey, you're on. Excellent. Shoot over some good questions. And I emphasize the word good. Let's dissect what happened. Let's see if it could have been traded or not. I have no idea. Okay. Let's go to screen share. What screen am I sharing? Where's my Twitter? There's my Twitter. All right, here we go. I sent out a tweet. I just took a screenshot. I'm still waiting for someone to recognize where this came from. I'm very disappointed in you people. I really, really am. And here's why. Here's the tweet that I sent. This tweet. Can anybody tell me what movie this is from? Obviously, the word trade wasn't there. So if you replace the word trade with another word, what movie is this from? I think I'm not going to do TA until someone tells me what movie that's from and what word was there instead of the word trade in the actual movie. Trivia. I got 900 people watching. Can someone tell me what movie this is from? I know that. Thank you. Alex W. Excellent. And Bitcoin. You guys got it. All right. Perfect. Good job, guys. This is from the movie The Big Lebowski. You replaced the word trade with the word bar, and you got it. And nobody got it in my message reply. Nobody mentioned it. Nobody mentioned it. All right, cool. All right, we can move on with TA. Oh, wow, 1,000 people on already. Let's go take a look at what's going on. Not going to delay you guys. Not going to bore you with my affiliate codes. Not going to shill. Maybe a little, but check that out. Let's go to the charts. Not going to look at the monthly. Not going to look at the weekly. Still not going to look at the weekly. We are still inside the triangle. Nothing from the weekly has changed. You have 1, 2, 3, 4 ones in a row. That means the weekly candles have told you not to trade for a month. The weekly chart has been in neutral, no trading for an entire month. All right. That's the weekly chart. Not going to bother with that. Oh, let me slide this over here. Hey, Philippine peso tip. Corey, jot that down. Let's take a look at what happened. Here's the daily chart. Here's your daily candle. It's got a huge spike to the downside. It's got a huge spike to the upside. The body is still kind of fat. The wick on the top is bigger than the wick on the bottom. This is Theo Goodman. taught me that this is known as a Darth Maul candle, and but this is not yet a Darth Maul candle. You want the wick on the top and the shadow on the top and the shadow on the bottom to be pretty much equivalent for it to be an official Darth Maul candle. So let's move on. We're gonna have to go in deeper here. Okay, so here is the here's the 12-hour chart. We're going to go way deeper in this one, okay? The 12-hour chart, what is it telling us? Well, it's telling you now again, it broke the setup trend line. It broke the line where I said you either, as a trader, you would go short or you would double down. Now, here is, I mean, trading is hard, okay? Now, I would have shorted here. Absolutely, I would have shorted. I would have been cautious. It would have been a red 6 below a red 5. That is usually way past my safety zone. I don't like to enter trades on 6s. 5s, I'm 50-50. On 6s, I don't like to enter trades. But this was a short play. Now, how would I have played it? Now, if I would have entered here, either it would have been a double down from over there, making my average entry somewhere in the middle, or it would have been a straight up entry. Where would my stop loss be? My stop loss would probably be where this blue line is. My stop loss would probably be just under or just over 6,400. Somewhere around this area. Now, obviously, you get into the trade and you get stopped out within the hour. Well, that's trading because shit happens, okay? Now, how did this candle end? This candle is ending as a bullish price flip and in a no trade zone. This 12-hour candle, if it closes here, how much time we got? We got 8 minutes. We will definitely go into the next candle. Let's see how this candle ends. And if it ends in the current vicinity, then this is not a prelude that higher prices are imminent, okay? It still basically means you are back to a no trade zone. You had a short trade. People with money decided to knock you out. There were probably too many leveraged shorts, which we'll get to, and you are back to a no trade zone. Chalk that up to a bad trade and you move on. Now, the OBV popped. That's good. CMF popped. There was a big volume spike on this candle. Let me put volume up. So you look at our volume spike, but that's fitting, right? Now, I'm going to take the volume back off. The volume isn't really telling you anything. The shorts, let's see. Let's zoom in on this buddy here. Let's see what we got. Got almost 1,500 viewers, guys. Man, everyone comes out of the woodworks when shit hits the fan here. So here are the shorts, right? If I zoom this out, the shorts are still at a historic high. I continue to emphasize that this is weird. This is weird with prices at the low. And it's strange. And I keep telling you, I don't know what it means. I don't know how to accurately interpret this. The shorts are at an all-time low. The ratio of longs to shorts is at an all-time low, which means shorts are over-leveraged. But shorts are over-leveraged at a point where the price of Bitcoin is prime for a big drop, okay? I don't know how to interpret this. I can't help you. We are dealing with uncharted territory. The last 2 times the shorts were this over-leveraged, Bitcoin doubled in price here, probably. What are the dates here? So this is September into October, and November is where we hit 7,000 on Bitcoin. And then again, shorts were over leveraged and Bitcoin went to the all-time high, right? But this is different because this was in a bull market. This is in a bear market. I can't help you here. I don't know. And because I don't know, when I don't know something, I am cautious. So the move here, the shorts, the over-leveraged shorts in this point in Bitcoin's history are telling you that shit is weird. And when shit is weird, it gets weirder, like the candle we just saw. Is this manipulation? I don't call this manipulation. I just call it people with more money than you. If you don't like trading this kind of market, go trade Apple stock like I do, okay? I'm just trying to analyze this thing as best I can. Now, here's the 4-hour chart. Did the 4-hour chart go bearish? Absolutely it did. Where did the 4-hour chart, let's drop the short leverage. We're not looking at it right now. Where did the 4-hour chart tell you to go bearish? Well, it told you about 12 hours ago. You had a red 2 below a red 1. Now, would I really have shorted it there? The answer is maybe. I would have been a little more cautious. I would have waited till the red 3 went below a red 2 because now we're in the vicinity of the lows. So let's take the more safe trade. The more safe trade was to short Bitcoin at under 6,300, right? So let's say 62.75. If I had shorted it here, remember, I don't know this insanity is coming, right? If I had shorted it right there, where would I have set my stop loss? My stop loss would have been set right here, okay? Now, all right, I have to move it over. My stop loss would have been set right here, okay? Now, what happens next? I'm gonna go into lower level time frames, right? Now, next, you start to fall hard. How far did Bitcoin fall from my entry? It fell from 62.75. What was the low on that candle? The low on that candle was $6,100. So how much was I risking? I was risking from 62.75. I was risking up to 63.75. So I was risking exactly $100. Now, those that attended my workshop, and I don't want to give too much shit away because then my workshops don't become really proprietary. What is taught in my workshop is that the moment you are profitable, the amount that you are risking, you have to move your stop to a break-even stop. So I was risking $100. So the moment I am making $100 or more, I have to set my stop loss to above break-even. Now, would the swing up gotten me out in a safe zone that I don't lose any money? The answer is I don't know. I don't know how liquid or illiquid your exchange is. I don't know if it would blow through your stop. The rules of trading are simple. When you have an entry and you have a stop loss, this can be a mental stop loss, this can be an actual stop loss, it doesn't matter. You have a plan. Your plan is either you are shorting at a red 2 below a red 1, in which case I probably would have set my stop loss a little bit higher, or you're gonna play it safe, you're gonna let it get closer to the swing low, which is what I probably would have done. I would have let it get closer to the swing low, would have shorted on a red 3 below a red 2 right here. Not sure if I mentioned it this morning or not. I probably said it was neutral because I think this morning we were probably higher. I don't really remember. It's been a long day. I've had a whole conference and this is my 3rd video in 24 hours. I think it's my 3rd video in 12 hours or something like that. And I'm risking $100. So if I'm making $100, the stop loss goes down. This is what I teach in my trade. Where would I take that stop loss? I would probably take it somewhere to this candle, okay? Now on the swing up, Did I exit in time? I have no idea, right? This is why I like trading regulated exchanges where this bullshit doesn't happen, okay? Now, I call it bullshit. I don't call it manipulation. I call it, you know, a guy with more money than you trading. And because Bitcoin is so illiquid. And that's it. And what do we have now? Well, we have a green 1, which tells you to be in cash. We have a green 2 that is not above the green 1, which is telling you not to enter any trades. So what we have is we have a weekly chart with a bunch of 1s, no trade zone. A red 3 below a red 2. This is still a short, guys. You have a red 3 below a red 2. This is still a short on a daily chart. Okay, so the daily is interesting, right? The daily, the red 2 did not go below a red 1. The red 3 went below a red 2. Where's your stop loss on the daily? Your stop loss on the daily is above the swing high or right at the swing high. What is your risk? Now, if your entry was right at the low of the 2, I don't know why I just skipped the daily here. Let's stop the oscillators here. Let's make this a big screen here. Let's zoom in here, okay? Let's dissect this thing. Here's the daily chart. The short trade is at 62.27, okay? What's the low on that candle? 62.28. Your short trade is of 62.27. Where's your stop loss? Where's the swing high? The swing high is 65.9650. That is your stop loss, okay? How much are you risking on this daily trade? 62.25 to, let's say 6,600, okay? 62.25 to 6,600, how much is that? So 62.25 to 6,600, that's just under $400, right? You are risking 375 bucks. Yes, I understand that is a big swing. I understand that. That's a big swing. If you had a stop loss, you know, above the most recent candle, which is another reasonable stop loss, your stop loss is hit and you lost whatever this is. That's okay. This is why you trade without big leverage. All right. We're going to get to the short level, small level timeframes in a minute, guys. So technically speaking, if you are a swing trader and you're willing to hold your positions for a few weeks, you're still short. You're still short. Can you get scared and get out with a loss right now? Sure, but that's your stop loss. Your daily chart, red 3 went below a red 2, stop loss has not yet been hit. We're going to leave it at that. The 12-hour chart, stop loss has certainly been hit on a 12-hour chart because that is your 12-hour swing high. We talked about that already. The 4-hour chart is neutral, no trade. The 12-hour chart is neutral, no trade. No position on a red 1. The daily is on a short position. The weekly is on a no trade as you come into the end of the triangle, okay? Now, this I have no idea, which is why weird shit is happening. Okay, now I'm not gonna care about Ethereum. I'm curious how the stock market ended. I'm still calling the stock market a no trade right now, just wait it out. Gold is on a no trade. Silver is probably on a no trade already, and Apple is on a short trade, which is now in a losing position by a couple of dollars, but that's okay. Yep, nothing there. Okay, let's get back to business here. Smaller level time frames. Let's go. Let's see what I have here. I don't know what the hell happened to my Bitcoin hourly chart. Let's see. BTC USD 1 hour. Do I have a 1 hour? Weekly 60 minutes. No, that's sample trades. I don't know what happened to my 1 hour chart, guys. I have my workshop trades, which is like random. I don't know what happened to my 1 hour Bitcoin chart. That's the one that had the cloud in it. Maybe I changed it to something. I have no clue. No clue. Maybe it's this one. I found it. It's this one. Okay. Here's my chart. Here's the one with the Ichimoku cloud. Here is the hourly chart. Let's look at the hourly chart. Let me turn off the Ichimoku cloud. Let me drop the indicators. Okay, here's the 1 hour chart, okay? Now, did the 1 hour chart tell you to go short? It actually did not. If you are a trader using the 1 hour chart, it never told you to go short. As you can see, here's the 1 hour chart. I love the sequential system. I have lots of people now that only trade the sequential system. What did the sequential system tell you? Well, it told you to go long right here, and it told you to, your stop loss got hit on the red 1 candle. 1 candles are a no trade zone. 1 candle, no trade. 1 candle, no trade. Did the 2 go above the 1? No, no trade. Did the 3 go above the 2? Not yet, no trade. You have 1 hour to go, okay? So using the 1 hour chart with the sequential system didn't tell you anything. Would I have gone short because the recent low was broken? Hell yeah, I would have. The 1 hour chart didn't tell me to do it, but that's okay. Not everything is perfect. I would have gotten short and I would have gotten stopped out. And this is a lesson to you if you don't have a stop, or if you're trading an illiquid stock and you got wrecked because you had too much leverage. That's a lesson, okay? Otherwise, I would have gone short, I would have taken the loss, or I probably would have taken break even, as I explained earlier. Let's zoom in. I'm gonna open up another chart. I'm gonna open my workshop trades. Workshop trades. This is my sample chart. I go down to the 1 minute charts when we do sample trading. Here it is. All right. Here is the 3 minute chart. We're not going to look at the 3 minute chart. We looked at the hourly chart. We're going to zoom in to the 30 minute chart. We're going to see what's going on, and we're going to take a look at what the hell happened. Okay, here's the 30 minute chart. Let's analyze the 30 minute chart. What did the 30 minute chart tell you? Let's drop the indicators. Let's just take a look at the price action. Okay. Here's the 30 minute chart. If you are a TD trader with a 30 minute chart, what would you have done? I understand this is hindsight. This is how you learn. You learn by back testing and trading. You know what? I'm going to do this one. I'm going to go to full screen this way. All right, Corey, I hope you got some good questions for me. I'm going to analyze the small time frames, and then we're going to do some QA. Let me see if anyone besides Corey is texting me. A couple of people. Okay. It's all good. I got almost 2,000 people watching. Here's the 30-minute chart. I never talk about the 30-minute chart. Let's dissect it. What do you have? What you have is a 9 at the low. You have, oh, wrong color. I'll use this one. You have a hammer. You have the price coming down. This was today. This was this morning. This was noon UTC time. I am almost at UTC time. What time is it now? Right now it's 2100 UTC time. It's past midnight for me. So I guess I'm UTC plus 3 right now. Right now I'm UTC plus 3. This was 2100 UTC. That's fine. So this candle comes in at noon UTC. So this was 3 p.m. for me. Okay. You have a hammer. You have a hammer on a nade. You have a hammer at the low. Okay. What happens after the hammer? You get a 9. Then you get a 1. Then you get another 1. And then you get a 2 above a 1. That is a bullish trade based on a 30-minute candle. Where's your stop loss? Your stop loss comes in below the swing low. Okay. Now it's a little bit low. It's a little bit low. Now look at this candle. It's a very strong candle. I understand that you did not earn your risk. What is your risk? Bullish trade 6,300. Would I have traded it to the upside? No, I would not. But the indicator is telling me to do it. My risk is 6,255 on 6,300. So that is a $45 risk. Where did this candle? So this is 6,300. where did this candle top? This candle topped at 63.33. So I was up $33. I was risking $45, okay? So I didn't quite cover my risk, but I would have raised this to the bottom of the bodies instead of the bottom of the wick. How high did the next candle go? The next candle went as high as 63.50. This candle has broken my risk. My initial risk was 45. I have now made 49. The moment you've made more than your risk, you set a break-even stop, okay? That's a break-even stop. That's it. This trade is not supposed to lose your money unless it's a liquidity problem with your exchange. The next candle went higher. You can raise that stop loss to the bottom of the prior candle. The next candle went higher. You can raise it again to the bottom of the prior candle. The next candle is a price flip and it touches your exit. You are out of the trade. There is a short trade on the table when a red number goes below the prior red number. Did that happen on a red 2 below a red 1? No, it did not. Did that happen on a red 3 below a red 2? It actually did, very slightly so. Very slightly, your 3 candle went below a 2 candle. So when it goes very slightly, you may or may not enter the short trade. Let's assume you entered the short trade. Oh, didn't mean to do that. Hold on, let me delete this. Let me take this, let me just make it red. Okay, let's assume you entered the short trade. Where is your stop loss? Your stop loss is right there on the blue line. How much are you risking? You are shorting at 63.20. You have a stop loss at 63.62. That is a $42 in risk. Now, the 4 candle did not really go lower. The 5 candle went lower. So if you did not enter the short trade, you have another chance to enter the short trade. Now you're in the short trade. How low did the candle number 5 go? That candle went to 62.70. Obviously, you've earned more than what you've risked. You immediately set a break-even stop loss. The next candle got crushed. Worst case scenario, you have to set your stop loss to the bottom of this candle. You now have now this one made a lot to the downside. Again, I'm giving away my secrets of my workshop here, but I don't even care anymore. I mean, my workshops are doing fine. I'm not really doing this for the money. And when you have a candle this big, you gotta put your stop loss in the middle of the candle, okay? So that means using a 30-minute chart, you are flying on the way up and you got your stop loss right here. So this was a pretty damn good trade. You have a green 1, you have a price flip. Did the green 2 go above a green 1? No, it did not. Did the green 3 go above a green 2? No, it did not. Did the green 4 go above a green 3? Bingo. Yes, it did. Do you want to take the long trade here? Excellent. Go for it. If you are a mechanical trader of the sequential system, you are entering the long trade right here. I'm going to take this. I'm going to make it green. Here's your autopsy of the 30-minute candles, starting with noon UTC time today off of a 9. This is how I would have traded it if I was a trader of the 30-minute candlestick. As you can see, this is my 3rd trade, and it's currently at break even. The 4 went above the 3. I am in. The current candle is a red 1. And a red 1 tells me to potentially go to cash. Right now, I have 16 minutes left. I will still be with you guys in 16 minutes, so we will take a look. Right now, my stop loss is here. How much am I risking? I am entering the long trade at 64.39. My risk is 6,400. Maybe I would set it at 64.39 or something. I don't know. Anyway, 400 round number. 64.40 round number, I am risking $40. That means the moment I am earning $40, I have to set an immediate break-even stop loss. If you are making more than what you are risking and you don't set a break-even stop loss, you will never, ever succeed as a trader. That's my advice to you guys, all right? For now, I would actually be raising my stop to the bottom of the candles, maybe, maybe not, because I'm already anticipating this candle to be a little bit higher. Is it going to close on a green 5? Absolutely not. Hey, maybe it won't. close higher. It doesn't matter, okay? The point is, I've already had several profitable trades based on this indicator over the last 12 hours. And if this is a losing trade, so be it, all right? That's my stop loss, either down here at 6,400 or up here at 6,415. Either way, if this closes as a red 1 above my stop loss, I may or may not exit this trade. Okay, it's debatable. Red 1s based on the sequential tell you to get out of your trade and go to cash. However, you have a stop loss set, and if you feel like it, you just let it hold on to it. You know, like raise your stop loss. You can let it, you know, fluctuate a little bit. Let's see what happens in 15 minutes. We will be back. Let's move on to a lower level time frame and try to do an autopsy on the 15-minute time frame. Hey, Corey, I'm going to get to your questions. I don't know, maybe call me if I need to get to those questions immediately. I want to just dissect all the time frames. I'm going to find the last 9, and I'm going to analyze from the last 9. We're going to take this down all the way to maybe 1-minute time frames to analyze what the hell happened and how. Let's say you are a trader using the 15-minute time frame, okay? How would you have traded this mess? You have a 9 candle. You have a 9 at a swing high, okay? It's a weird 9. The 1 candle after a 9 is a non-tradable candle, okay? The candle after a 9 gave you a new swing high and it closed as a shooting star. That is a bearish candle following a 9. The next candle is a green 2 that does not go above a green 1, but it does trade lower than the shooting star candle. Now, is there a short trade here? The answer is maybe, okay? The answer is maybe. According to traditional trading analysis, which I also teach at my workshop, anytime you have a shooting star at the top and the following candle is trading below that shooting star, that's a short. It's an even more confident short if you have a 9 candle the right before the shooting star, on the shooting star, or the candle after the shooting star if it's in the vicinity of a 9, right? Like actually, if you have a 9 candle, or you have a reversal candle before the 9, on the 9, or the candle after the 9. You have a reversal candle, the candle after a 9. You have 2 reasons to go short. 2, not 3. I would want it to have 3. I want 3 things to go short. I have 2 out of 3. If only this was a red 1 and this was a red 2 below a red 1, that would be 3 things. I have 2 things. If I went short here, which I probably would not, or I probably wouldn't, but you could go short. If you did go short, your stop loss is here. How much are you risking? You are going short at 63.35. You are risking $25. The moment you are up $25, you have to set a break-even stop loss, okay? You are up $25 somewhere on this candle. You then set a break-even stop loss. As the market keeps crashing, you continue to set your stop loss to the bottom, then to here, then here. So, oh, sorry, not to the bottom, my bad, you're short. To the top of this candle, and then you lower it to the top of that candle, and then the top of that candle, actually the middle of that candle is too big. So you probably could have gotten stopped out on this 4 candle, maybe, okay? Now, let's say you didn't take this short trade, okay? And then you had a green 3, still no short trade. Price flip. Was there a red 2 below a red 1? The answer is no, there wasn't, okay? Price flip again, boom, a red 2 below a red 1. That is your short, okay? Where's your stop loss? Swing high, stop loss don't change. The next candle is a green 1 price flip. You have the option to go to cash, but you don't have to go to cash because you haven't hit your stop loss. Cash, 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 stop loss not hit. You may or may not be in the short trade. Let's assume you exited the short trade because the ones scared you. Where's your new short trade? Your new short trade is on a red 2 below a red 1. Where's your stop loss? It's either the same or it's over here. Both very reasonable. How much are you risking? From here, you have a 63.05 to 63.45. I'm rounding. That's a $40 stop loss. The moment you are up $40, you go to a break-even stop loss. If your stop loss was there, if your stop loss was, let's say, 63.65, now you have a $60 risk. The moment you are up $60, and you were certainly up $60, within 30 minutes, you were up $60. You have to set a break-even stop loss. Once you're making a lot of money, you got to lower your stop loss to the high of the prior candle, right here. This candle, I probably would have went into the middle of that candle, and my stop loss may or may not have gotten hit. Either way, it's getting hit. Now, you price flipped on a 1, that's a no trade zone. This is a no trade. There is no reason to take the bullish trade. It stops you out of a profitable short trade. No reason to go short at all. Sorry, no reason to go long here. None whatsoever. Green 2 does not go above a green 1. Green 3 does not go above a green 2. Green 4 does not go above a green 3. Then you get a price flip. Then you get a green 1. Finally, you get a green 2 above a green 1. You are in the long trade. Where's your stop loss? Your stop loss is right there, okay? So your stop loss is below the swing low. You are in the bullish trade. You're on a green 4, but the next candle will probably price flip you. So you can either continue to risk whatever this is in the long trade, 64.40, you are risking $40, okay? The moment you are up $40, you got to set a break-even stop loss. Where do you get out of this trade? Either you can raise your stop loss to the bottoms of the candles, or you get out of this trade on a red 1, or you wait for your stop loss to get hit, okay? 15-minute chart, dissected. 10-minute chart, let's find the last 9 and go from there. Boom, there's your last 9. It's going to be a little bit longer, unfortunately. There's your last 9. Let's analyze it as of the last 9, as if nothing ever happened. As you can see, the 9 gave you a swing low. That's what you want to see. You can zoom this chart out, right? Look how far we got to go. That is a reasonable swing low. That's a nice wick. It's not a perfect hammer, but it's a good enough hammer. You have a 9 at the low. You are taking your profits from a short trade. You are waiting to get into the long trade. Where's your long trade? Where's your bullish trade right here? Your bullish trade takes place on a green 2 above a green 1. Look, I'm sorry, guys, if I trade the TD sequential. The TD sequential is the best indicator for trading. That is my 10 years of experience in trading. TD sequential is the shit in trading. That's why I use it. I know people are complaining, how come I'm not looking at any other indicators? Because most other indicators are downright useless, okay? There is 3 things I use primarily in my trading. I use the shape of the candlestick. I use the chart patterns like triangles, but I don't care for those things on short level time frames as much. And I use the sequential system because the sequential system works on 1-minute charts and on monthly charts, okay? That's why I like it. Green 2 goes above a green 1, and that's my entry. Where is my stop loss? My stop loss is at the swing low. The swing low is a little bit far, so I will probably use the bottoms of the candles. That is a reasonable stop loss. Maybe I will start at the bottom of the wick, and I will try to move it to the bottom of the candle as soon as I can. And the moment I am earning my risk, I am immediately moving my stop loss to break even. And then as I continue to make more money, I continue to raise that stop loss. Let's see what happened. You have a green 2 above a green 1. You have a green 3 above a green 2. Everything is great. 4, 5, bam, price flip. On a price flip, you can choose to exit your trade. If you exited your trade here, you took a very, very small loss. There was absolutely no reason to raise your stop because you never profited. Your risk was either, what is the entry here? 62.92. What is the risk? 63.72, right? Your risk was $20, or your risk was 92, let's say 52, I'm gonna round, $40. So it's either $20 or it's $40, okay? Doesn't matter which one, this is gonna be a profitable trade, okay? Goes along if you don't get scared on a red 1, the red 2 never goes below a red 1, and now you're going up. You have another green 2 above a green 1. Guess what? You can actually double down. If you are still in this trade, you can, this is one of those rare times you can double down because you have another green 2 above a green 1. It's actually in the green zone. Again, a little secret that I teach in my workshops, I never ever double down on losing positions, but I am happy to double down on bullish positions. I don't dollar cost average when I'm wrong. I'm happy to double down when I'm right. Doubling down right there is perfectly reasonable, especially if your initial position was a little bit smaller than it normally would. Okay, stop loss doesn't change. However, you have the option to raise it to the nearest swing low. I would probably leave it. I think this is the time where I would raise my stop loss from a $40 risk up to a $20 risk. Okay, remember this is 10-minute time frame. Now we're going up. You have another red 1. It's your option. It's a trader option. Do you want to go to cash, or do you want to let your stop ride, or do you want to raise your stop loss? I would consider raising my stop loss because a red 1 would make me nervous, but not nervous enough to get out of the trade, okay? So I would probably raise my stop loss to there. Doesn't really matter because boom, you pop to the upside. You have another green 2 above a green 1. I would not double down here. This is a dangerous double down, mostly because this candle was too big, okay? Don't double down too high. And I've already doubled down once. I'm not gonna triple down on my original trade. This is it. I'm never doubling down this trade again. It's good enough. But at the top of this candle, I have earned more than my risk. So absolutely my stop loss goes to a break-even stop, okay? Maybe even to the middle of that candle, but probably just somewhere over here. That's my new stop loss, okay? You have a green 3, green 4, 5, 6, 7, 8. Boom, 8 gives you a shooting star candle. That's a problem, okay? I know I'm so close to a 9. I got a shooting star candle. Either way, my next candle is a potential exit. Either my next candle is a 9 or my next candle is a price flip. Either way, my stop loss immediately goes to the bottom of the shooting star candle. Either that's a 9 and I'm taking my exit. So either I'm getting out at the 9 with most of my profit, or my stop loss goes to the bottom of this candle. Either way, I am out. I am out of this trade. Now, what happens right after that? Right after that, you get a red 2 below a red 1. A red 2 below a red 1 after a shooting star candle is a shortable opportunity. You can short right there. That is your short play right here, okay? Red 2 below a red 1, that's your short play. Where's your stop loss? Your stop loss is above the swing high, okay? How much are you risking? 63.36 up to 63.60. You are risking $25, okay? You have a $25 risk. This should be red because it's a short play. Hope I'm not boring you guys, but I have 1,800 people and everyone seems to be watching. I'll get to your questions in a minute. I'm just gonna go through this. That's your short play, okay? You're risking $25. Did you ever make $25, okay? What is the low of this 5 candle? So what was my entry here? 63.35, I'm short. What's my 63.35? What's the low? 63.22. So I did not make $25. I only made $13, okay? So I did not, so I have no reason to lower my stop. Boom, I got a price flip. What can we do on a price flip? You can either exit your trade with a very small loss, or you tighten your stop loss to the swing highs. Like, where is the high? See this high right here on the 7 candle? See this high right here on the 8 candle on the body of the candle? Let's drop that stuff. You can lower it to there, okay? Now, then you have a red 1, then you have a green 1, you have a green 2, not above a green 1, a green. Now, I don't want to cherry pick, right? Let's give the benefit of the doubt. Let's say your short trade stopped out right here and you took a little bit of a loss. Okay, fine, screw it, you took a loss. Did a green 2 ever go above a green 1 anywhere here? No. Did a green 3 ever go above a green 2 anywhere here? No. Did a green 4 ever go above a green 3? No. There was never a long trade on the table. What happens next? You get a price flip to a red number. What happens next? You get a red 2 below a red 1. Boom, you are back in the short trade. Where's your stop loss? Well, this one is tricky. You can do a stop loss off the recent swing high right here, or you can do a stop loss off the ultimate swing high. I probably would have gone with a tighter stop loss right there. So let's look at the trade. You are short as of 63.18. Your stop loss is at 63.44. How much are you risking? You are risking about $26. That is a $26 risk. What happened next? You clearly fell more than $26. Therefore, you immediately set a break-even stop loss. And then with every 10 minutes, you lower your stop loss to either the top of the prior candle or the middle of the prior candle if the candle is very, very large and you don't want to risk the entire up move of that candle. So you either you lower it to the top of the 3 candle when the 3 candle ends, or to the middle of the 3 candle. You then raise it to the top of the 4 candle or the middle of the 4 candle. Either way, your stop loss ain't getting hit. Then you lower it to the top of the 5 candle. Now the 5 candle is very, very dangerous. That is a dragonfly doji, which is a potential reversal, but it's a 5 of 9. I'm going to trust the indicator. I'm going to wait for the 9. Next candle did not go up there. Now I understand every exchange is different. Shit swings. Could you have gotten stopped out here? Absolutely, you could have. And hey, you still got a profitable trade. You avoided this whole disaster. Now, if your stop loss did not get hit, I would absolutely set my stop loss to the middle of that 6 candle. If this was my middle, I got stopped out on the 7 candle. If it wasn't my middle, my 7 candle was fine. I would have lowered my stop loss to the top of the 7 candle, and boom, I got hit. Now, the 10-minute chart, however, did give you a bullish trade. Now, the 10-minute chart would have told you to go long. Oh, I have a little green line here. The 10-minute chart told you to go long right here on a green 2 above a green 1. You can go long. Where's your stop loss? Your stop loss is down here at the swing low. I understand it's pretty wide. That is 63.72 to 6,100. 63.72? Damn. That is a large stop loss, guys. That is a $275 stop loss on a 10-minute candle. That is unreasonably high. But the moment this candle started to go up, how much did it make you? From 63.70, what was the swing high? 65.50. So 63.70 to 65.50. Man, it's like 12:30 in the morning and I'm doing math in my head. What do we got here? 63.70 up to 65.50. That is just under $200. That is a $180 move. I would have probably raised my stop loss because it was too dangerous to begin with. Would have raised it to the middle of this candle, maybe even the bottom of this candle. To be honest with you, right now, I would be setting a break-even stop loss. Now, let's see what happened. Let's see if anything's different here, all right? You have a green 3 did not go above a green 2, is still green numbers, boom, red 1, shit. Okay, I say shit. I'm like, man, I need to go to cash. It's a profitable trade. I went in on a green 2 above a green 1. I'm price flipping. I'm going to be very cautious. I'm going to set my stop loss right there. If we go below the 4 candle, I want to make a little bit of money. I'm good. I get a red 2, did not go below a red 1, no big deal. I get a price flip, boom, green 2 above a green 1. Would I double down here? I probably wouldn't. I would just raise my stop loss to below that candle. I then had a green 2 above a green 1, green 3 above a green 2. I might have raised that stop loss to the bottom of the 2 candle, and I would be out of this trade right now. I would not be long. I would not be short. I had a red 2 below a red 1. Would I be short right now? The answer is maybe. Based on a 10-minute candle, you can easily go short right now. I probably would not do it, but you have a red 2 below a red 1. Where would I do my stop loss? I would do my stop loss right here. That is my current outlook on the 10-minute candle. It's on a short play. You had a red 2 below red 1. Now, if this candle in 5 minutes gives me a green 1 and a price flip, I will either turn that position into cash and take a very small loss, but most likely I would simply lower the stop loss to the top of those candles. Okay, that is my current outlook on a 10-minute candle. Let's go to the 5-minute candle. Please give me a 9 that is very, very close to the current environment. Oh, beautiful 5-minute candle. I have a 9 at the low. It's probably cheating. I have a 9 here. Ah, man, I'm already getting tired. I don't want to go through this again. Let's just start here. Red 1, red 2, now below red 1, red 3, now below red 2, red 4. Maybe below a red 3, doesn't matter. Red 5 is below a red 4. You are on a short trade. We're just stop loss. Stop loss is at the swing high. I'm going to go through this faster, guys. I still have 800 people watching, probably same people. Boom, I got a 9. Would I take my profit on the 9? Absolutely, I will take some profit on this 9, okay? Hopefully at the bottom of the candle, not at the top, but it doesn't matter. I took some profit on the 9. When would I put that profit back into my trade? It goes back into the trade on a red 2 below a red 1 following the 9. I'm back in the short. I would not have taken all of my profit, so now I'm 1.5 times my short position, okay? Where's my stop loss? This is tricky. I have no idea. Probably in the middle of the 9 candle, maybe at the top of the 1 candle. This is a difficult stop loss. However, how much am I risking? Let's give it a lenient stop loss. I'm in short 62.52. I'm risking $50, okay? When am I making $50? I'm clearly making $50 on the 6 candle. This stop loss is going right here. It's going smack in the middle of the 6 candle. I have a 7, 8, 9, bam. I want to get out on this 9. I'm setting my stop loss right here at the top of the 8 candle. I'm setting a profit taking somewhere over here. If this 9 was a big down candle, I'm taking my profit. If it's not a big down candle, my stop loss is tight as hell. Tight as hell. I want to be out on this 9 completely. Absolutely, my stop loss is here. Okay, you got the 9. You got the 9 reversal, a nice strong candle. I would consider picking up some right here, right above the 9. But ideally, I want to see a green 2 above a green 1. So either I go in right here and then I double down on a green 2 above a green 1, or I don't go in right here and I go in on a green 2 above a green 1. Either way, your initial stop loss is somewhere below the swing low. Yes, huge stop loss, absolutely huge, okay? But as you can see, your position is still fully in the green. It was never hit, okay? I'm not gonna dissect this. Hell yeah, I'm setting a break-even stop, okay? No way am I gonna risk this right now. No way that's still my stop loss, okay? I might even raise this stop loss to the swing low right there, okay? That would be my current outlook on a 5-minute chart. I would probably still be long, waiting for the stop loss to be hit. In fact, I would be raising my stop loss up to here, okay? Worst case scenario, you're in long on a green 2 above a green 1. My stop loss is below that candle, and that's where we are right now, okay? Let's go to the 3-minute chart. I got 3 minutes and 1 minute. Where's our most recent 9? All right, very similar. Again, where would I go? It's, you know what, the 3-minute chart looks so similar to the 5-minute chart. I don't even want to go through it. But hey, you had a green 2 above a green 1, green 3 above a green 2. Your 3-minute chart told you to go long right there. And right now, I would have a stop loss. Obviously, this is your initial stop loss. You have made way more than you've risked. I'd put my stop loss smack in the middle of that candle. You're price flipping left and right. I would put my stop loss just below the swing low or below the closing low. If it's below the closing low, your stop loss is about to get hit. If it's below the swinging low, you have a little bit of time. Finally, let's go to the 1-minute chart. Zoom out. See what happened here. Let's do a little autopsy on the 1-minute chart. All right, you had a red 2 below a red 1. You're in short. It's cherry picking. Let's go to a weird zone. Here it is, right? Weird red 2, now below a red 1. Red 3, now below a red 2. Red 4, not really below red 3, barely. I wouldn't count it. Again, no trade, no trade, no trade. Boom, bullish trade. Bullish trade right here on a 1-minute chart. There's your bullish trade. You're in a bullish trade, 1-minute candles. All right, we're just stop loss. Stop loss right below there. I know it's red, but it's just stop loss. I'm tired of changing color. All right. 4, 5, 6, 7, price flip. Boom. You know what? I'm getting nervous here. I'm going to move my stop loss up. It's a red 1. If I get a red 2 below red 1, I'm out of this trade. I got a red 1. I hit my stop loss. I lost a little bit of money. Red 2 goes below a red 1. You are short. Okay. We're just stop loss. Stop loss is below this, is above the swing high. That's your stop loss. Mental, realistic, it doesn't matter. You gotta have a plan. You gotta have a plan. If you don't have a plan, you will lose all of your money. You gotta have a plan. You have to understand why you're getting into a trade. You have to understand when you're getting out of a trade. You gotta have a plan. It goes down, you've earned more than you've risked. You said that you move your stop loss to break even. Then you lower it. I would lower it to the middle of the 3 candle. After the 4 candle, I would lower it to the top of the 4 candle. Then you get a sequential 13. Boom, your stop loss got hit. 6 candle goes down, 7 candle goes up. Boom, you got a green 1. Boom, you got a green 2 above a green 1. That's a long trade. You are in for the long trade. We're just stop loss. Stop loss is either below the swing low or it's below the candle body. Doesn't really matter. It did not get hit. Okay, so it doesn't matter which one we set. That is your stop loss. Now, what happened here? You had a price flip. It makes you nervous. Then you had a red 2, not below a red 1, red 3, not below a red 2, red 4, below a red 3. That makes me nervous. Would I get out of this trade? My stop loss was never hit. My stop loss is still down here. Let's assume my stop loss got hit. Let's even assume I went short. Let's say I flipped my long position to a short position. That's fine. Where's my stop loss? My stop loss is right above the recent swing high. Okay, that's my stop loss. Then I get a green 1. That makes me nervous. The following candle is a red 1. If I'm short, my stop loss is above the swing high because now I'm short. Then I get a green 1. Then I get a green 2 above a green 1. Well, if I flipped my long to a short and lost a little bit of money a few candles ago, I'm going to do the same thing. I got to be consistent. I'm going to lose a little bit of money again, and I'm going to flip my short into a long, and I finally make up for my 2 losses. I made money on the big drop. I lost money over here because I went short. I lost money over here because I went long. I lost money over here because I went short. But now I go long. Where's my stop loss? My stop loss is below the swing low. Now it goes up big time. I immediately set a break-even stop loss. I immediately raise my stop loss to the middle of this giant 2 candle. And then I keep raising my stop loss to the bottom of each candle. This one, then this one, then this one, then this one. The 6 candle is a big candle. 7 candle is a big candle. I might go into the middle. The 7 candle is a big candle. I might go into the middle. Guess what this candle is? That's a 9 candle. See this big drop off the top? I am out of this trade. I am absolutely out of this trade. I am getting out on this 9. I made my money on this 1 minute candle. I am out of this 9. I get a green 1. I get a green 2 above a green 1. Would I go long right here on a green 2 above a green 1? The answer is maybe. I think it's a little overextended. But let's say you went long above that, where just stop loss. That's a big problem. When you go long on 2s after 1s after a 9, you got a stop loss problem. Worst case scenario at the bottom of the 9, probably in the middle of the 9, or maybe where this red line is. And obviously the stop loss would have gotten hit, okay? I'm not gonna go through all that mess. It's just price flipping. Using the 1 minute candles, I would not be in this market right now. I would absolutely not be. However, you did just get a red 9, you got a 1, you got a red 2 below a red 1, so the play is to short. It's a short. Grab this line, boom, you're short. You got a red 9, you got a red 1, you got a red 2 below a red 9. We're just stop loss. Well, actually, I don't know why I'm drawing new lines. My stop loss would be here. That's my 1 minute candle analysis, okay? When will I lower that stop loss? I will lower it when I make as much money as I'm risking, okay? Here's my 1 minute candle chart. I am short. I am short as of a red 2 below a red 1 after a 9. I'm very consistent here. I am short as of 64.24, 25, 64.25. What am I risking? I am risking $12.50 off of 64.25. How low did this candle go? 64.11. So this is 64.25. This is 64.11 at 64.12 on the low. That is $13. And this is 12.50. This is 13. I have already made more than I'm risking. I am setting a break-even stop. In fact, I already had another candle. There's my stop loss. My stop loss is below a 3 candle. I will wait 25 more seconds. I will see what happens with the current candle, and I'm going to lower my stop loss to the top of the candle with a number 4 on it right now. Okay, that is my stop loss. This is my trading using 1 minute charts. Also look at the 9 at the high. That's a 9 to me on a reversal candle, which is beautiful. Absolutely beautiful. All right, beautiful. There you go. There's my short trade. I'm lowering my stop loss. I'm using 1 minute candle trading. I am short as of 64, 24.50. I have a stop loss at 64.15. That is right now. That's my stop loss. So right now I'm guaranteed to make $12 on this trade. All right. I can pay for a cup of coffee. Beautiful. Look at that. There's your 1 minute candle. I am short. This blue line shouldn't be here. I don't know what that is. This should be blue though. That's my stop loss. All right. There's my 5 candle. Let's see how this candle ends. Let it go to, got 7 more seconds here. Let's see how it goes. All right, boom, candle ended. That is called an expanded range candle. My stop loss is now in the middle of that candle. Okay, I'm gonna play this out only for 3 more minutes. Either way, this trade is gonna exit on a 9. No matter what, this trade is exiting on a 9. So we got 2.5 minutes of me watching charts. As I drink my tea. It's almost 1 o'clock in the morning here in Ukraine, guys. Hope you people appreciate this shit. Okay, the 5 candle, sorry, the 6 candle is over. We have the 7 candle. The 6 candle is a dragonfly doji candle. That is a candle of concern. I will not lower my stop loss to the top of the 6th candle. I will leave my stop loss in the middle of the 5th candle. I will give this trade a little bit of room. I will allow it to get to a 9, or I will let it hit my stop loss. I don't think it's going to hit it. I honestly think it's about to just drop. I could be wrong. It doesn't matter. See, it doesn't matter if I'm wrong. It doesn't matter what I think is going to happen on the next tick. I have confidence that that blue line will not be touched. I'm going to be very wrong right now. And guess what? My trade's going to exit if I hit the blue line. Nope, not yet. Not yet. Not yet. Not yet. See what happens. Either way, I'm exiting on not 9. I hit the 9, I'm exiting. And the only way I'm going to hit the 9 is if the 9 candle is below that point right there, the bottom of the 5 candle, which it's probably not going to do. So either way, let's see how this, I'm actually very curious how this next minute ends. All right, we got 10 seconds, and then we get that final candle, right? That final candle is going to be a price flip. If the next candle is going to be a price flip or a 9. I got 3 seconds. My stop loss still has not gotten hit. And now I have a price flip, right? So I'm going to give this candle a minute. It doesn't really matter if I lower my stop loss at this point completely. I just, either way, next candle, I'm out of this trade. Done. We're out of the trade. All right, that's it. We can go to QA. Trade's over. No position right now. If I get a green 2 above a green 1, I can then go long, set my stop loss below the swing low, and we can go long on a green 2 above green 1. Make this green. Green 2 above green 1 gets you long off of the Dragonfly Doji. That's your initial stop loss. I guess we're in the trade. Yep, we're definitely in the trade now. That's my initial stop loss. It's a little bit wide. I don't really like it. Like, yeah, I don't want to sit through another trade. I don't want to like watch these minute by minute ticks. I don't normally, I would never trade 1 minute candles, but the rules don't change. The rules on 1 minute candles are the same as the rules on daily candles. You just have no time to watch other indicators, right? My stop loss would probably now be here. How much am I risking? 64.05, 04, 64.04. What am I risking? 64.90, $15. I'm risking $15. The moment I am making $15, I am raising my stop loss to break even. Let's see. You know, I don't even want to sit through this. I want to get to your QA. If I get a red 1, I'm out of this. If I get a price flip, I'm out of this trade. See, I have no idea is it going to go up or down. I really, really don't. I'm using 1 minute candles. How the hell do I know if it's going to go up or down? This looks like it's ready to collapse to me, but I could be totally wrong. I'm going to trust my indicator, and I'm going to go long on a green 2 above a green 1, see what happens. I'm going to set the right stop losses. And that's how I'll trade. And the moment I'm uncomfortable with the trade, I will get out of this trade. I'm actually uncomfortable with this trade. I probably would not have done it. And now I get a red one. I am totally going to raise this stop loss to the bottom of there it is. I'm done. I wasn't comfortable with this trade. Okay. Probably should not have done it. And I was raising that and I'm out. Let's get to your QA, guys. It's 1 in the morning. All right, Corey, let's do this. Let's see what you got for me here. Is it possible we go to around 7,500 and have a bull trap? Do you think it's possible? Yes, it's possible, but unlikely. It's very unlikely. Oh, and that's why you said that. That's why when you're uncomfortable with the trade, you just get the hell out of that trade. I think it's very unlikely. Okay, if I go to, okay, I have to get out of the. There it is. I'm going to go to the weekly chart. It's unlikely to go 7,500 because now you're above the triangle. I mean, you could go to the 30-week moving average. Is it going to be a bull trap? I don't think it's a bull trap. I think a bull trap is if you break $8,500 high and then you crash. I think a bull trap is higher than 7,500. If we're at 7,500, I'm not going to be a bull yet. I'm going to need more than that. All right, next question. Longs were the overwhelming majority in November and December. Is this the same situation in inverse, or are there differences? It should be the same situation in inverse. And with so many shorts, you would expect the price to go up, not down. But price is more important. And the triangle is telling you that the price should be going down. But yeah, when you have over leverage to one side, that's the side that usually loses. Next. Does this mean we broke the trend of 2014? Absolutely not. This was just like a one-day $500 swing. I mean, look at this weekly candle. What happened in the last 3 hours? I mean, in 3 days, you're not going to remember it happened. And most traders in the space have the memory of a fish anyway. No, this doesn't change anything related to 2014. Absolutely not. Next. Is the dead cat again or no? Guys, this is nothing. This is nothing. Look at the weekly candle. Hell, look at the daily candle. Look how, when I zoom out, look how irrelevant today's candle is. It was just crazy on a 1 minute time frame. A week from now, this candle is going to be totally meaningless. And keep in mind, if we still have, how much time do we have in a day, right? So we still have 2 hours to go. For all we know, 2 hours from now, we're going to be back at $6,000, right? Like you don't even know how this day is going to end. This is nothing. This is absolutely nothing. I mean, look at this. Look at August 22nd. Do you remember what the hell happened on August 22nd? I don't remember what happened on August 22nd, and I do this shit every day. And August 22nd was a more volatile day than today. Is Bitfinex long short legit? Guys, there's, how do I know? Bitfinex is like one of the, I don't know, it's probably the shadiest top 3 volume exchange we have, like them and Binance, right? Like, I don't know. I don't know if it's legit. Where does the data come from? It comes from TradingView. I don't know, guys. I'm working with the data I have and doing the best I can, right? If you guys don't trust the data, go trade the stock market. Way more legit. Tone, we have economy people saying that the financial crash may be coming. Guys, the financial people have been telling me that the crash has been coming since the day we left the 2009 crash, okay? They know nothing. What do you think would potentially happen to Bitcoin during a crash? I don't know. It depends on the crash. If it's a 2008 style crash, Bitcoin is going to be in serious trouble. If it's a 2011 style crash, it would be amazing for Bitcoin, okay? Go review the 2011 European crisis. Go review the 2013 Cyprus crisis. Go review the 2015 Greece crisis. If it's something like that, it would be amazing for Bitcoin. If it's 2008 crisis, gold crashed 33%. I think Bitcoin would be in serious trouble. Look, here's the thing, right? If people in America lose their jobs, it's bad for Bitcoin. If people are worried about that their banks may shut down, it's good for Bitcoin as long as they don't lose their jobs. Next. What is the most confident, successful trade you have ever made using the sequential system? I mean, I'm not going to be able to pull those up, right? I mean, there's been some really, really good ones. I mean, Amazon recently, right? I mean, my friends were trading. I was too busy. I was guiding my friends through the Amazon trade. We can pull up Amazon. Here is Amazon. This is Amazon Weekly. We were trading Amazon daily. And it was right here. It's right here. Got out right on this doji. It's a good exit. Rode it all the way up. You know, I've had some successful trades. I'm not going to go through the details right now, but I'm more of an options trader now. I don't really trade this about. What was that? Why do I have a? That was a weird noise. All right, next. Do you think Tim Draper price predictions? He predicted 10,000 5 years ago. Now 250,000 by 2022. If Bitcoin is 250,000 by 2022, Draper had a very good guess because he has absolutely no freaking idea what's going to happen. I honestly don't believe that Bitcoin would be 250,000 by 2022. Is it possible? Yes. Do I think it's likely? No. Next, is it possible that the shorts are at all-time high levels because most are hedging from a high entry level with low leverage, expecting even lower prices? Yes, it's possible. I'm just too tired to think about the details of that question. Next. Tone, you said you don't use stop loss trading margin on BitMax. So what would you do in this case? I would set my leverage so that my stop loss is full liquidation of my position. So I would transfer, let's say, 0.1 Bitcoin into BitMax. I would calculate what leverage I need to put on my position so that my stop loss wipes out 0.1 Bitcoin. That's how I was trading. Next. And then I would transfer another 0.1 Bitcoin for the next trade. I know it's annoying, but I don't, I mean, or you can do that. That's how I like to trade. I like having my, on an exchange like that, my stop loss is liquidation. But you can set a stop loss. You can set a stop loss. Next. I do use stops so much. I mean, I use stops all the time in traditional markets. Just that crypto is weird sometimes with stop losses. I just don't trust most exchanges. Next. Hey, thank you for your tip, Crypto Judge, and the fact that you really liked this this 1 hour. It's been an hour. It's been more than an hour. Yeah, I had a tequila tonight. I'm really trying to take a break from drinking. It's not working. Green 2 above green 1, trading any S&P 500 options is killing it. Thanks. Hey, glad you're making money, TJ. I'm always happy when people make money in trading. Look, I don't care if you trade shitcoins. I don't care if you trade manure. I don't care what you trade, as long as you know what the hell you're doing. People that trade Ripple don't bother me. People that think Ripple is useful bother me, right? Trade Ripple, make money, make dollars, make euros, make Argentinian peso. The reality of the situation is the Argentinian peso is a lot more useful and a lot more honest than Ripple token. Now, can you make money trading the Argentinian peso? Sure you can. Can you make money trading Ripple? Sure you can. But if you're going to tell me that Ripple is useful, I'd rather hold the Argentinian peso. It's a lot more useful to me. At least I can burn that thing for heat. Can't do shit with the Ripple token. Such a scam. That's what bothers me, guys. That's what really ticks me off. Okay? Tell me you're trading Ripple to make more Bitcoin and show me some of the trades that you made to make money. Excellent. Tell me that Ripple token is useful and I think you're a scammer or a complete buffoon and an idiot. Okay? Pick one. Either you're one of the stupidest people in crypto or you're a straight up scammer. That's the kind of person that believes that Ripple is a legitimate token. If you're gonna look to me in my face and say, I know Ripple is complete garbage, but I'm making so much money trading this garbage, I'm gonna say, excellent. Keep this knowledge to yourself, because the more people you tell, the less money you'll probably make. Next. Guys, I haven't really paid attention to weed stocks. I'll take a look at a weed ETF or a weed index, or like a marijuana index, and maybe we'll keep an eye on the marijuana index. I'm really just not familiar with that industry because I don't do any drugs. I don't smoke. I don't do cocaine, contrary to lots of opinions. I don't do drugs, guys. I never did. There's nothing wrong. I don't have a problem with people that do drugs recreationally. To each their own. Not here to police what you do. I personally don't do it. I don't smoke weed. It's just not my thing. And so I don't really pay attention to that industry. I don't need to. It's not my industry. This morning you put the break of a triangle, the same value of the vertical line of the triangle, silver chart. On BTC USD, you put the 50% and not the value. Why? That's a good question, because if I put the value of the fat part of the Bitcoin triangle and not the percent, Bitcoin would go to negative 1,000. I highly doubt Bitcoin price would go to negative 1,000. So my default would be to use the percent instead of the value. Now, when the value is reasonable, I put the value. When the value is not reasonable, I put the percent. And that's for descending triangles. For ascending triangles, it's the other way around. In an ascending triangle, the percent could be a lot bigger than the value. So in an ascending triangle, if the value feels a little small, then go with the percent. It would be a much bigger number. If it's coming from low prices. If it's on the high prices, then it's the opposite. It's a judgment call. All right, Corey, I don't see any more questions. Well, maybe I'll grab this one, and then I got to call it a night. Will all the new derivative products coming to market from banks help move recovery more quickly in Bitcoin? No, absolutely not. The only thing that I'm happy about with the financial products coming out of Wall Street about Bitcoin is that it gives Bitcoin legitimacy. There's always a concern that the US government and the European government are going to come out and say Bitcoin is illegal. Every person that uses or even holds Bitcoin is a criminal. And if we catch you with even $1 worth of Bitcoin, you're going to go to jail. Just like at one point, if we catch you with an ounce of weed, you're going to go to jail. If we catch you with $1 of Bitcoin, you're going to go to jail. It's very, very difficult for the government to make that statement if Bitcoin has futures and an ETF, okay? So the best thing to come out of the financial world is the fact that Bitcoin is actually legitimized with the financial products, okay? Makes it very difficult for the government to criminalize Bitcoin. And if you don't think the government may criminalize Bitcoin ever, then you are living in a bubble. You're living in a bubble. I don't listen to music anymore, guys. I'm a Bitcoiner. Fun kind of went out the window. All right, I think that's enough. I think it's about an hour and a half that I've been on. Maybe a little more. I have no idea. It feels like forever. Anyway, I'm tired. I need to get some rest. Good luck trading, guys, and talk to you all on the next one. Oh, wait. How many viewers do I have on? 1,500. Well, probably would have been a good time to show the affiliate codes. Totally forgot, but hey, you know where they are. Tonebase.com, affiliates. That's how you can support my work, and I'll bring you more. Bye, guys.